on January 27, 2025. If you owned NVIDIA stock that morning, well, I'm sorry, because while you were sipping your coffee, your retirement fund was having a heart attack. NVIDIA crashed 17%, $589 billion, gone. The biggest single-day loss in stock market history, not just NVIDIA history. Any company's history, and the cause? Not a war, not a recession, a free app from a Chinese AI company nobody had heard of. Here's the part that should terrify Silicon Valley. That app was built for $6 million, not $600 million, not $6 billion, $6 million. Today we'll explore how a hedge fund side project rewrote the rules of AI economics, and why the next chapter may be starting right now. I'm your host, and this is China Business Insider. So let's talk about DeepSeek. Most AI companies follow the same expensive playbook. Raise billions from VC, hire thousands of engineers, buy every computer chip on the planet, keep everything secret, charge premium prices. OpenAI has raised over $10 billion. They're valued at $157 billion. They burn through $5 billion a year. That's $13 million per day. And just this month, we learned their plan. Spend $32 billion on AI training in 2026, $65 billion in 2027. Total losses could hit $100 billion by 2030. But hey, they promise they'll be profitable by 2030. Sure. DeepSeek looked at that model and said, yeah, we're going to do the exact opposite. Now, before we go further, you need to understand where DeepSeek came from, because this isn't a typical Silicon Valley startup story. DeepSeek was founded in July 2023 by Liang Wenfeng, but he didn't come from Google or OpenAI or some prestigious AI lab. He came from a hedge fund, specifically a quantitative trading firm called High Flyer that he co-founded back in 2015. Here's why that matters. High Flyer was already using AI to make trading decisions. By 2021, they were managing over 100 billion RMB, that's about $14 billion, and generating annual returns of 20 to 50%. They were using machine learning to spot patterns in market data that humans couldn't see. But Liang saw something coming. In 2021, before most people were talking about AI chips, he started buying NVIDIA GPU. Lots of them. Through shell companies across Asia, he acquired about 10,000 A100 chips. At the time, this was just for High Flyer's trading algorithms. But here's the key. He did this before the U.S. government imposed export restrictions on advanced chips to China. When the Biden administration banned those chip exports in 2022, most Chinese AI companies were cut off from the hardware they needed. But Liang, he already had his stash. 10,000 high-end GPU sitting in a data center in Hangzhou. In 2023, with the AI boom taking off, Liang made a pivot. He redirected most of High Flyer's resources into a new AI research lab. Not to make money directly, but to push the boundaries of what was possible. He called it DeepSeek. And he made a radical decision. Everything would be open source. Here's the crazy part. DeepSeek is funded by a hedge fund, not venture capital. They open-sourced everything. They charge almost nothing, and they built their AI on chips that the U.S. government literally banned from export to China. It's like entering a Formula One race with a car you built in your garage, using junkyard parts and winning. But then something weird happened. The real story isn't the technology. It's what happens when you tell engineers they can't have something. Let me give you the numbers because they're ridiculous. DeepSeek version 3, $5.6 million to train. Meta's Llama 3 around $100 million. OpenAI's GPT-4 estimated $500 million to $1 billion. Google Gemini? Probably $700 million plus the souls of several engineers. DeepSeek did it for $6 million. That's not a typo. That's less than Silicon Valley startups spend on office snacks. So, how? 3 tricks. First, mixture of experts. Instead of running all 671 billion parameters every time, they only wake up 37 billion. The rest stay asleep. Very efficient, very lazy. I respect it. Second, they stopped scraping the entire internet. Instead, they used high-quality synthetic data. Smarter models teaching smaller models. It's like downloading knowledge directly into your brain instead of 4 years of college. I'd sign up for that. Third, and this is the key, they had to optimize everything because they had no choice. When you can't get the latest chips, you learn to squeeze every drop from what you have. Constraints breed creativity or desperation, sometimes both. Now, I need to explain the chip ban because this is crucial to understanding why DeepSeek matters so much. In October 2022, the U.S. Commerce Department imposed export controls on advanced semiconductors to China. Specifically, they banned the sale of NVIDIA's most powerful AI chips, the A100 and later the H100, along with the equipment needed to manufacture advanced chips domestically. The goal was clear: slow down China's AI development by cutting off access to the hardware that powers modern AI. The U.S. expanded these restrictions in 2023 and again in 2024. They even restricted the sale of slightly less powerful chips like the H800, which NVIDIA had specifically designed to comply with earlier rules. The message was unmistakable: China would not be allowed to access the computing power needed to train cutting-edge AI models. This was supposed to create a permanent lead for American AI companies. No chips, no AI. Simple as that, except it wasn't. Now, on January 27, 2025, DeepSeek had released their R1 model 5 days earlier. It matched OpenAI's best model on math and coding, and they made it free. But the stock market was closed for the holiday, so investors had 3 days to panic read the technical papers. Monday morning, markets open, bloodbath. NVIDIA down 17%, Broadcom down 17%, the Dutch chip equipment company ASML down 7%, even a nuclear power company planning to restart a plant for AI data centers down 21%. All because investors asked one question: if $6 million can do what $1 billion does, did we just waste $500 billion on AI infrastructure? Awkward. The irony is delicious. The U.S. banned advanced chip exports to slow China's AI development. Instead, it forced Chinese engineers to get creative. That creativity wiped out more market value than most countries' GDP. It's like stopping a runner by taking their shoes. They just run barefoot faster. So what does this actually mean for you, listening to this right now? First, if you're an investor or you have retirement money in tech stocks, you need to pay attention. The entire AI infrastructure trade, the data centers, the chip makers, the power companies, was built on the assumption that more computing power equals better AI. DeepSeek proved that's not always true. Efficiency matters. Engineering matters. If more companies follow DeepSeek's path, the trillion-dollar AI build-out might not be as valuable as everyone thought. Second, if you use AI tools for work, your costs are about to collapse. DeepSeek charges about 95% less than OpenAI for the same capabilities. That's not a discount. That's a completely different business model. Expect price wars, expect better deals. The consumer AI market just got a lot more competitive. Third, and this is the big geopolitical one, America's strategy for maintaining AI leadership just got complicated. The chip ban was supposed to keep China 2 to 3 years behind. DeepSeek suggests that gap might be months, not years. And if China can build competitive AI with restricted hardware, what happens if they solve their domestic chip manufacturing problems? The entire U.S.-China tech competition could shift. So, what happens now? As of this recording, March 2026. Multiple credible sources report DeepSeek is preparing its next move. The Financial Times, citing 2 sources, says V4 is coming. Reuters reported in January that a new model focused on coding would arrive in February. Those dates passed. Now the betting markets point to March. Here's what we actually know. DeepSeek quietly expanded to 1 million token context windows in February, updated their knowledge cutoff. The infrastructure is being prepared. The timing would make sense. China's 2 sessions. Political meetings started March 4th. Nothing says national champion like launching while the entire government watches. But wait, more drama? Last month, Anthropic accused DeepSeek of using 24,000 fake Claude accounts to distill their model, basically using Claude to train their AI. Their argument? This lets Chinese companies copy powerful models without safety guardrails. Proof that chip bans are necessary, which is kinda rich. DeepSeek built R1 despite chip bans, not because they cheated. It's like accusing someone of stealing your homework when they got an A on the test you failed. Meanwhile, DeepSeek's business is doing fine. Reports say they hit break-even last month. First time ever. Here's where it gets interesting for listeners who don't follow Chinese tech. Tencent, Think of them as China's version of Facebook meets PayPal, about 1 billion users, and started using DeepSeek's open-source models. Their API sales jumped. Half their cloud customers tested DeepSeek, 20% want custom versions. Oh, and my favorite detail, a friend at a state-owned cloud provider says their GPU servers are completely rented out. For the first time ever, years of investment might pay off. DeepSeek created a business boom for Chinese cloud providers. Here's what I find most interesting. For years, the story was, China copies, America innovates, China follows, America leads. DeepSeek flipped the script. They didn't copy OpenAI, they built something different, more efficient, cheaper, open, and in some ways better. They proved that when you cut off access to the best tools, people don't give up. They build better tools or figure out how to do more with less. This applies way beyond AI. Any industry, any market, constraints force innovation. Comfort breeds complacency. The US chip ban was supposed to slow China down. Instead, it accidentally created their most credible AI challenger. Oops. So what should you watch? 3 things. First, will V4 actually arrive? The Financial Times says it's coming. When it drops, will markets panic again? NVIDIA recovered from last year's crash, but Wall Street has a short memory. Second, how do OpenAI and Google respond to a price war where their competitor charges 95% less? That's not a price cut. That's a price collapse. OpenAI announced $32 billion in training spend for 2026. DeepSeek spent $6 million. The math is not mathing. And third, when DeepSeek monetizes, and they will, what's the play? Enterprise? Cloud services? Something else? My bet, DeepSeek becomes the Android of AI. Open infrastructure powering everyone's apps. That's worth more than subscriptions, that's just platform economics. That's it for this episode. DeepSeek's story isn't about one company. It's about constraints forcing innovation, open source beating closed source, a hedge fund in Hangzhou scaring Silicon Valley, and it's not over. When V4 arrives, we'll analyze it. Until then, watch this space. DeepSeek isn't going anywhere. Next time, Chinese electric vehicles in Europe, trade wars, tariffs, and why your next EV might not be allowed in your country. Subscribe so you don't miss it. Leave a review if you learned something. Thanks for listening. I'm your host, and this is China Business Insider.